Candle Ratings Trader coming at you with another video on how to supercharge your CRT profits with this indicator. So don't forget to like and subscribe to the channel. Like this video, subscribe to the channel. Let's not waste time. Let's get started. So what this video is going to cover is a brief explanation of the candle range theory. Okay, if you don't know what it is, I will give a very brief explanation. If you do know what it is, great. We won't spend a lot of time on that. The reason why we want to use this kind of indicator, I'm not big on indicators, but there are some that can be very helpful to us. I'm also going to show you what the indicator is, how to put it on your chart, how to use it, and then give a few live examples, and that'll be that. So what is the candle range theory? Obviously, it just shows that it's the belief that every single candle that you see is a range, and you simply focus on the high and low of that candlestick, that one candlestick, to show you a specific trade entry that you could take. This is a brief short example of one where we have a yellow ATR candle, and if you don't know what that is or what I'm talking about, you're going to want to go back to the video that I shot, very first video showing what the ATR candle is. And then secondly, you have the money candle as well that pokes above the high of that yellow candle and closes back inside of it. And then simply price tanking to the bottom of that range. That's all it is. That's all the candle range theory is in a nutshell. And it's the same thing for a long example. You just flip it. All right, so that's the candle range theory in a nutshell, treating each candle as a range. So what I'm going to show you can be used in any market. Okay, not every video I make is for every specific market. I trade currencies. But this strategy can be used for Forex, crypto, stocks, gold, futures, whatever has a chart, you can use this. So that's the good news. So what is this indicator? This indicator is known as what's known as a baseline. And I have to give credit to the creator of this concept, who is no nonsense Forex. He's here on YouTube. Feel free to Google him. He's more into indicators than I am. I'm more of a price action trader. However, you can do both. Who cares? So the baseline is an indicator that goes on the chart. It shouldn't be below it. It should be on top of it, okay? And the concept of a baseline is that when price closes or a candle closes above your baseline, it's a signal to go long. When a candle or the price closes below the baseline, that's a signal to go short. Now, do you have to use the baseline that I'm going to give you in this video? No, you can use a different one. You may already be using one, but experiment with it and see how it works, all right? So that's that. So for the sake of this video, the indicator we're going to use is the 20 EMA, okay? 20 EMA. What is that? It's just a line on the chart that's going to show you the price of any given asset over the last 20 periods. It could be the last 20 days, last 20 hours, last 20 minutes, okay? It doesn't matter. It depends on what your time frame is on the chart you're looking at. For this video, all the charts I'm going to show will be the 4-hour chart, okay? I trade the 4-hour chart. Okay, but the traders use the 20 EMA to identify trends, which is what we're going to do, and also possibly spot support and resistance. Okay, so that's that. How do you put it on your chart? You're just going to go over the trading view, click on indicators, you type in EMA, and then go to the settings. You click the little gear icon and change the length, as I'm showing right here where my cursor is, to 20, and hit OK. That's it. That's all you got to do. Just change the length to 20, and you got a 20 EMA on your chart. Done deal. So it is important to note, though, that if you choose to experiment with different EMAs or SMAs, you don't want the baseline to be too far or too close to the price. You don't want it to hug the price. You're going to get a lot of false signals, a lot of closes around the baseline, but it shouldn't be so far away like an 800 EMA where price is pretty much never touching it. So you kind of have to find a happy middle. And we'll explore other baselines on this channel as well, but this is the first one that I've found that works pretty well. So this is the decision flow and how we want to actually use this system. So if there's a meat to the video, this is it. So pay close attention to this, take a screenshot, do whatever you got to do. These are the questions that you have to ask yourself when you're coming to a chart. Number one, is there an ATR candle, a yellow or a blue candle for the sake of this video, that is above, below, or around your baseline? If no, there's no trade. Okay, period. It always starts with the ATR candle. So blue candles, we're going to be looking for above our baseline, in this case, above the 20 EMA, all right? And let's remember that blue candles are a signal to go long. If the candle wasn't blue on a regular chart, it'd just be red, all right? And then yellow candles must be below the baseline, all right? And that's our signal to go short, okay? So after we identify an ATR candle and it's in the right place, next has price poked above the range high or range low, the candle range high or low, and then close back inside of it. If yes, that's our sign to enter the trade. And if no, there's no trade there. And then you just set your take profits and your take profit and your stop loss. So if you put together the CRT and the ATR in a baseline, you can get some pretty explosive results. So let's take a look at some of them here. So this is euro dollar. All right. So first thing, and I wish this was a little bigger, but there were a lot of candles here. Remember, this is a 4-hour chart. So I hope you can see where my cursor is right here. You have a yellow candle below the baseline. Let's toggle back to our decision flow. Is there an ATR candle around or below the baseline? Remember that our yellow candle must be below the baseline. So when we go back to our chart, we have a yellow candle that has exceeded the average true range, okay, but it's still closed below our baseline. So next we wait for a money candle. And if you see, your price is simply bouncing off of the 20 ATR as well. So once we see that it cannot break the range high, and it's also using the 20 ATR as a resistance point, that's our key to enter. Can't talk today. And this was a 364 pip drop over a week period. All right. So look at all that could have been yours. Okay. All that could have been yours using this very simple system, because what we're expecting is price to actually break out of our candle range and keep going. If we use the regular candle range theory, our exit would have been the bottom of this yellow candle here. But hopefully you're seeing the power of this, whereby if you see where price breaks out of the range to the downside and just keeps on trending, now you're seeing the profit potential. Let's go to the next one. This is another short example. Right here, this most recent yellow candle. Now I want to throw this in here too as well, because this method is not 100%, because as you see here, here's the yellow candle to the left right here, where price went down a little bit and then came back up. All right, but let's remember that according to our, so this would have been a loss. Just, if you would have taken this, yeah, it went down a little bit, possibly a break even or even a loss, because price kept going up. But on this range right here, where we have a yellow close below, all right, and then we have our price where it can't break above the candle range high. This red line here is the candle range high, and then it just tanks. And this is Australian dollar on the 4-hour chart. And it led to a 130 pip move once it broke out of the range and just continued downward here. See, but it all starts with the ATR candle below the baseline, below the 20 SMA or EMA, sorry. All right, 132 pips over a week. Let's take a look at some long examples now. So number one, where's our ATR candle? It's blue. Is it above our baseline? Yes. All right, so now we're looking at it. We're not trading yet because we have to wait for price to dip below the candle range low, the green line, and then close back inside of it. Once it does that, enter anywhere on this range for a nice long trend up. This is gold. Okay, I don't trade gold, but if you do, it works on there too. Okay, let's go to another one, another long example. This is Bitcoin. Everybody loves Bitcoin. All right, so we have a blue ATR candle right here. Okay, blue ATR candle right here above the baseline. Price taps the candle range low, and then look out. Price went from 99K, I think it was about 99,400, all the way up to $106,000 as of this, actually up to 107,000 on this one chart here, using this simple premise of the ATR candle and the baseline. And then it breaks out of our candle range, right? Because it's trending long. All right. I hope you're seeing the potential of this. So last example, another long example right here. Price closed right at the baseline, so it's not 100%, because if you notice here, our entry is actually below the baseline. But what we're counting on here is for the 20, the EMA, okay, this blue line, our baseline, to act as support, and it did that. So once we got our money candle here, the money candle is also technically below the baseline, but you have to just use a little discretion, use some it's an art, it's not a science, is my point. If you want to stick to hard and fast rules, that's definitely fine. However, this range here, it paid out and paid out big. Now, this was likely news driven, this big spike here, but the premise is still the same. I don't necessarily advocate trading news, but there are times where, it's just going to do what it's going to do. And there is another example here. I didn't note it, but see here, this blue candle here to the far left, lots of consolidation, and then price just trended up very nicely. So this is another, just a bounce off the 20 EMA using the range, the ATR range. Couldn't break below it. The 20 EMA was our support and just kept right on going. Using, once again, ATR candles as support and resistance points. All these black candles, other than our entry, we're ignoring them. We don't trade these. It always starts with our ATR candles. And again, if you don't know what an ATR candle is, you need to go back to the video where I talk about the ATR candle. All right, so in conclusion, Using a baseline with ATR and CRT can help ride trends. You're just looking for pullbacks in a trend. This is nothing new. Okay. It's just a different way to detect it. The 20 EMA is not the only baseline, so you can experiment with others. This is perfect for swing traders. Okay. For day traders, you don't really need a baseline. Just trade ranges. You'll be fine. So remember though, if price closes back below your baseline, okay, it's a signal to get out. And here's a good, let me see, this first example, where was it? Here is a good example of that. See this yellow candle here? And then when price closes above the baseline, say here, I hope you can see my cursor. I know it's kind of small, but if you're short and price starts to really close above your baseline, you could just go ahead and exit and save yourself the loss. All right, that's a signal that, hey, price may go up a little bit, but then you get another chance right here a few candles later, so it's no big deal. Losses are just a part of the game, so get good at taking them and keeping them small, and you'll be okay. Let's see. If you see it, you will see long ranges that work out below the baseline, and you will see short ranges that work out below the baseline. It is what it is. The baseline is just used to possibly identify trends, but once again, you're going to see blue candles that are under the baseline that still pay out. So you don't really necessarily need a baseline. This can just lead to bigger profits. Is it required to use this though? It's not. I don't use it every day. I just don't. I may check it every now and then, but I'm not really big on indicators. Okay, so this method is not 100%. So please control your risk and don't be greedy. Every move is not going to look like this one. I'm sorry, this one. Okay, this is not an everyday occurrence. You're not going to get 400 pips every single day. Not going to happen. Okay, at the best, I'd say between maybe 150 to 200 would be decent. And know the ATR of your pair. If your pair only moves, like for instance, on a day, let's say like you have a pair and you're dealing with the average true range over a day of 70 pips, don't expect to get 200 pips. Okay, that's kind of foolish. All right, be realistic with your take profit goals. So don't be greedy, and you'll be fine. All right, don't be greedy, you'll be fine. Operate within the realm of reality. Use the ATR as a guide. Okay, use the ATR as a guide. So, thanks so much for watching. Please comment, like, and subscribe for more content. I appreciate your time and attention. If you have any questions as well, you can comment them. I appreciate all the views and everything that you guys are contributing to the channel. And I hope you got something out of this and enjoy the rest of your day.